It's a pleasure having you all here join us today for our Family Law Now live presentation on support and high income earners with Michelle Mulchin, Margie Primero-Pimentel, Carrie Heinzel, and Russell Alexander. I'm going to take a few moments here to tell you what you can expect to learn from our panelists today, as well as do some introductions. And once we get started,
can we run the poll while we're doing that? Our first poll?
Yeah, absolutely.
All right.
Yeah, we love to get to know our audience and just hear a bit more about you and understand where you're coming from. So while I'm going through this, we can just answer the first poll here, which is tell us a little bit about yourself. Thanks, Russ. So over the next hour, our speakers will be sharing their knowledge on the following topics as it applies to support in the case of high income earners. So first off, they'll be discussing court and alternative dispute processes, determining income, determining support, and they will also be discussing other important considerations on this topic. And as Russ mentioned, we will be, as always, having our Q&A segment throughout. So we invite you to submit your questions via the Q&A if you have not done so already. And we're very fortunate to have such a large and engaged audience today. We've already received several great questions from the audience members upon registration, but we'll do our best to get to as many as we can. So as I mentioned, please feel free to put those into the Q&A. And our speakers will do their best to get to as many as they can. So just before our panelists get started here, let's take a few moments to get to know them a little bit more. So first off, we have Michelle Mulchin, and Michelle is the Senior Managing Lawyer at Russell Alexander Collaborative Family Lawyers. She's been practicing family law for over 14 years and is skilled in all areas of family law. Her focus is on creating comprehensive, creative resolutions to family law matters, and Michelle excels at helping clients deal with complex financial issues that arise as a result of separation or divorce. Margie Primero-Pimentel is next, and Margie has been practicing family law since 2007. She is a collaborative family law practitioner, an accredited mediator, and our junior managing associate lawyer at our firm. She also serves as a dispute resolution officer for the Superior Court of Justice in Newmarket and Toronto. Next, we have Carrie Heinzel. It's always a pleasure having you on the program, Carrie. And Carrie is the founder of Fairmore Family Law Financial Solutions. Fairmore offers independent, fact-based financial analytics and settlement insights to individuals and couples working through separation and divorce. And Carrie is an active collaborative process trainer, co-teaching the introductory program for new collaborative professionals and advanced level trainings for the seasoned practitioner. And last but not least, we have Russell Alexander, who is the founder and senior partner of Russell Alexander Collaborative Family Lawyers. And with 25 years of experience, Russell offers a wealth of knowledge and expertise in collaborative family law. And Russell has also written 4 books on separation and divorce and is a fully trained collaborative practice lawyer. He shares his knowledge and expertise by speaking at conferences on collaborative practice, marketing, technology, and the law. On that note, I'll let you take it away, Russ.
Great. Thank you so much, Shannon. We had 280 people register so far for this program, so I want to thank our audience for coming out. Please give us your feedback at the end of this program. It's deeply appreciated. It helps us understand what we can do better, and it helps us understand what topics our audience is looking for. So let's see who our audience is today, Shannon. All right, 65% family lawyer, law professional, 11% lawyer in a different area, 8% professional in a different area, 5% going through a separation and divorce, 4% helping a loved one. We have 5 students here today. It's great to see the law students joining us, and other, you can put that in through the Q&A box. So thank you for answering those poll questions. We'll have a few more as we go at our program. Got a lot to cover off, so let's get right at it. Michelle, court and alternative dispute resolution. What we're talking about, high income earners here. What's our audience need to know?
Right. So thanks so much for that introduction, Shannon and Russ. So, I mean, thanks so much also for doing the poll and letting us know. We have a lot of lawyers here, so you guys know about court. So I'll kind of make this one a little bit shorter. This is usually the default option for a lot of people. When you hear family law, you think, everyone goes to court. That's not for our firm. Our firm takes a different approach, but it is often what happens when you go to a lawyer. And to be quite honest, we do that because we don't think it's the best option. It's long, it's expensive. You likely won't have an answer until trial if you're dealing with such high complex issues such as incomes over 350. And in a post-COVID world, that timeline keeps getting pushed and pushed. I think now it's probably about 2 to 3 years till you can get a trial, depending on your jurisdiction. So I will say that there are pros and cons to court. So for instance, where you have a situation where you've sent the letters, you've tried to get disclosure and the other party just isn't being forthcoming, then you may just have to go to court. That might be your option. So I had a recent case where we tried to get dad's income for 6 months and he had counsel. He kept saying he was going to get it, but there was another excuse after another excuse. Lo and behold, we issue a court application. You know, within days, we get the response. And we also get a letter saying, okay, we agree with you. Let's go to MedArb now. So it's not often that we will have to resort to court, but sometimes there are reasons. So there are, of course, disadvantages to court. So costs, depending on who you represent. If you represent the lower income spouse, costs are often an issue. And, you know, you can get around that with motions and interim motions and getting advanced payouts, but there's still cost to all of that. There's also litigation fatigue, and we find this a lot. It is emotionally draining to be part of a family law case. And it is just something that you just wouldn't wish on anyone. So a lot of times we find, especially if we are representing the lower income spouse, that they hit a wall, whether it's financial, emotional, they just don't have the bandwidth for it. It's taking over their life. It's, you know, monopolizing time that should be going to family or work. And they just say, you know what, I'm going to take this deal. It's not a good deal for me, but I'm going to take it because I don't want to have to deal with court. There's also the issues of battling experts. So I have a couple of files right now where we have multiple experts who've given very different opinions on the same thing. And the problem with that is now we have to go to a trial because we are $200,000 apart. You know, if you were $20,000 or $30,000 apart, it might make sense to split the difference. But a $200,000 loss or gain is a big difference. So if we don't do court, what do we do? So one of the first things we really like to do, and it's right in our name, is we love collaborative law at our firm. So it's really our default. We try to make things as amicable as possible. You know, we don't quibble over disclosure. If you want the disclosure, we may not think it's necessary, but we're going to give it to you because if our client truly has nothing to hide and there's no cost to getting some bank statements, sure, you can have the bank statements. Generally, we find it's shorter. We find it's less expensive, but it does require both parties to be forthcoming. So again, if you're in a collaborative situation, and Carrie and I have this right now where we have a file together, and I hate to say it's my client who's being difficult. And sometimes I just want to, you know, take him and say, look, you're wasting everyone's time and money here. But if you have a situation where one party is being difficult, then collaborative may not be the best for you. So on every single file, we start with screening and we have conversations with our client. We talk about what has happened in the past, what their relationship is like. We look for, you know, whether there would be any issues with respect to domestic violence or things like that. And only after we speak to our clients do we come to a decision about whether collaborative would be good for them. And remember, within collaborative, you can still do a lot of the things that you would do in court. You just tighten up the timelines a lot. So you can still actually have experts. What we usually do, though, is we hire a joint expert. So again, with a case Carrie and I have, we're hiring a appraiser who's going to get an appraisal of the matrimonial home, and they're going to do it jointly. So we're not going to have this battling appraiser situation. We're going to have one appraisal, and we've all agreed that's the one we're going to go with. You can share the costs. So for that appraiser, because it's a shared appraiser, you share the cost of it, which is really helpful to the party who has the lower income. Sometimes because it makes the other party think that, hey, you know, they're being reasonable, they're sharing the cost, but really you're not paying for the cost of a full appraisal yourself. You're actually paying half the cost. We can also do things like you would do in court, but without having to bring motions. We can agree to an interim payment. So we can agree that, hey, we know that party A is going to be paying party B something. We don't know what that something is right now. but whatever it is, here's a smaller amount that we can go to the lower paid spouse so that it will help them with their legal fees. Another thing we can do is we can have the party with the higher income pay for everything up front and then just do the accounting at the end. So there are lots of really interesting ways to manage that. And I think the really big savings is the time and the cost, because we're not, I unfortunately booking a motion today, I expect that motion to happen in September. Whereas if I was doing this in a collaborative setting, I can get a meeting in a week or two to really deal with these issues. So then the next thing I use a lot is, oh, go ahead, Russ. I can see that you're.
No, you're doing great. I don't want to cut you off.
No, it's okay.
I'm taking notes.
You're good, good. The next thing we do a lot is mediation, or actually my preferred is mediation arbitration. And especially for things like high income earners, I would prefer a med-arb. And the reason for that is you don't want a case to drag on. You don't want to go to mediation, waste 6 months of time, and then not come to a decision. So I'm doing another case right now where we are right in the arbitration stage. And because the arbitrator has frankly gotten annoyed with us and has heard all of our arguments for the last 6 months, they're doing a really reduced arbitration. So we're doing it in a written format. They've heard all of the arguments throughout. We've already provided case law summaries. We've provided, what has happened historically. We've provided the disclosure. And really, the arbitrator is going to make some decisions based on the written materials. So it's faster, it's cheaper, we get a plan. And on top of that, we can actually manipulate the med-arb agreement. So what do I mean by that? I mean that in this particular case I'm talking about, we amended the med-arb agreement to include some really important clauses that were important to my client. My client's the lower income spouse. And some of the clauses we included was an automatic disclosure clause. So those issues about parties not providing disclosure and what disclosure to provide, because there's some additional disclosure that would be necessary every year that isn't part of the normal list of things we ask for. We put it right in there that whatever the agreement or arbitrated decision is, will include this particular disclosure clause. And that if one party doesn't abide by it, there are cost consequences. We've also done it because as you know, child and spousal support, we often have to revisit these issues. Incomes fluctuate year by year. We've also included a mandatory arbitration clause so that every year the parties have a process whereby they're going to do these particular steps, provide disclosure, discuss, try to come to an agreement. But if they can't within a pretty short time frame, and I think ours is about 60 days, they go to arbitration. Right? So think of the potential cost savings down the road. We don't have to bring a motion to change every single time. We can have this done within a matter of months. And even within the arbitration, you can still hire experts. Again, it's usually a joint expert. It's usually a shared cost. You're not having this battling expert issue. And you can really craft things to make it work for both parties. So the last thing we talk about is negotiation, and I put it last, but really it is first. It is the first thing we start with. We don't jump to collaborative. We don't jump to court. We try to negotiate first. But quite frankly, unfortunately, I found where there's a really large income disparity, usually negotiation doesn't work that well. If it did, we would all be out of jobs. Right, Russ?
No comment.
All right. Should we do our next poll, Russ?
Well, there's people who are going to litigate, but this is a great summary. Michelle, I'm fine in my experience, and you correct me. 90%, over 90% of the cases go to med-arb or collaborative practice with a full team for a number of reasons. First, they don't want to damage the brand. Secondly, if it's a celebrity or a pro athlete, usually it's going to affect their career, their marketability. So that's been my experience. What about you, Michelle?
I definitely think for high income earners, a full team is important. There are lots of issues, lots of things that occur. And, having a family professional on board is really helpful. Sometimes these issues trickle down into the children, and we never want that.
And sometimes you'll hear about these cases in the news and they disappear, right? They go to MedArb or some private closed process. The ones that stick around, usually they're litigating for different purposes, right? They're on a vendetta, or I don't know. Has that been your experience, Margie?
Yeah, I find that a lot of these cases, when I was preparing for this webinar, I found very few cases, well, relatively few. I think because a lot of them are settled out of court.
Yeah.
And I realized, it's because there is such a high discretion. You're really taking a gamble if you have a high income earner client. You really are taking a gamble in court because it's really up to the judge. Like I say that a lot to my clients, but it truly it's very discretionary, and we'll get into that more. But that's one of the reasons why if you represent a high income earner spouse, consider MedArb or a collaborative or any out of court process first.
Something that'll give you some control. It seems the higher the income, the more the discretion.
Exactly.
About it. So let's see what our audience is thinking. What should be considered when determining support income? So this used to be line 150. Now they call it line 15,000. I don't know the purpose of the change. 34%. Gross income 21%. 3-year average. We see that a lot when there's spikes in income, 30%. The amount of equalization being paid 10%. The date of retirement of the payer spouse, 0. So you're going to be paying for a while. And other 4%. Thank you for sharing your thoughts. All right, so determining income. Margie, what do we need to do here?
So the starting points for determining income under the SAGs or Spousal Support Advisory Guidelines is the definition of income under the federal child support guidelines. And for the most part, the income issues are the same for spousal and child support purposes, particularly when you're interpreting provisions under section 15 and 20 of child support guidelines and any of the Schedule 3 items particularly when you're dealing with section 7, for example. At times, particularly when you're dealing with self-employed individuals or business owners, and the majority of the high income earner payors are self-employed or business owners. When you're dealing with those sorts of cases, the income that the person claims, as we family lawyers know, is not really what you claim on your income taxes. That's not the end of the analysis when you're determining income for spousal support purposes or child support purposes. Income may be attributed or imputed to you, and that goes both ways. And I'm finding that especially in high income cases, it also can be something that the recipient has to take into account, like they could be imputed or attributed as income. So the expenses, for example, when we're talking about attribution of income, expenses claimed for tax purposes might be added back to calculate income to determine support if these expenses are unreasonably deducted. And that's under section 19 sub 2 of the child support guidelines. So just because someone has deducted that from their income tax returns doesn't necessarily mean that for the purposes of calculating support, your income for support purposes, if you're a business owner, you have to show that any deduction for business expenses is in fact a legitimate business for legitimate business purposes. You could also be attributed income through the inclusion of any corporate pre-tax income. And so, I mean, I've dealt with several cases, and whenever I deal with a spouse who owns a corporation, you always want to get an income determination because it's a question of law, really, whether or not certain portions of the corporate pre-tax income should be attributed to the payor, right? So under section 18 sub 1 of the child support guidelines, it says where a spouse is a shareholder, director, or officer of a corporation, a court has discretion. That's our word of the day to add all or part of the company's corporate pre-tax income to that spouse's income for support purposes. And so, when a court is looking at corporate pre-tax income and whether it should be added, attributed to a payor's income, for example, they're going to consider a wide range of factors, but primarily they have to determine to what extent the spouse clearly has control over the company. And so attribution of a company's corporate pre-tax income to the spouse can really push a spouse's income at or above the $350,000 ceiling, right? So that's why it's important to look at that. So in terms of high income earners up to $350,000, so in terms of child support, parents who earn above $150,000 are considered the high income earners and may be ordered to pay either the table child support in Section 7 or their contribution to Section 7 expenses, if any, or another amount as determined by the court as appropriate. Again, that discretionary part when we're talking about high income earners. For spousal support purposes, the $350,000 income range is what we call the ceiling in the SAGs. The ceiling is not really a cap on spousal support, but it's rather a general, I want to say like borderline, at which point a court may order spousal support outside of the SAGs ranges. Usually, the courts will order support within the SAG ranges for incomes below $350,000, but close to the $350,000. And at or below the SAG ranges in above ceiling cases where the income is relatively close to the threshold. So in other words, if the closer you are to 350, the more likely it is that it would be close to the $350,000 range for SAGs. I'm talking about SAGs. The further away you are from 350,000, the more likely it is would be lower than the SAG ranges. That's what I'm seeing from what I've looked at. So that's for incomes up to 350,000. So Michelle, I think you're going to talk about incomes over 350.
Well, we've got a new word of the day. Usually our word is depends. Right. Now today is discretion. So
It's kind of like a fancy word for saying depends.
You know, it's pretty much the same. I wish we could say we were being interesting and new here.
you're representing these high income earners. You're throwing a target, right? A dart at a target. The discretion is every judge is different. But Michelle, income's over 350. Now we're starting to muddy the water a bit. This is a bit more of a gray area. What do we need to know? And then Carrie's going to help us out with right after that. We're going to talk about non-T4 employees. But let's just talk about this concept of income over 350.
Right. So when it comes to income over 350, as we've been joking about it, you know, it's not like throwing a target, but it's close because I do a lot of work in kind of the Central East, and you get to know the judges very well. And, you know, I like to tell my clients, I've been before Justice X so many times. I think he or she is going to do X. And how many times have we walked in and Justice X does the complete opposite, right? So it really just depends on what's been happening and how their day is going, if they had breakfast or not. Sometimes, you know, maybe they don't like the color of the shirt I'm wearing, who knows? But realistically, when it comes to it, most people who are high income earners, it is a gamble, right? It really is a gamble, and it's a big gamble. So you're going to be looking at things like, you know, how is their income made up? So, you know, are they working with, do they have a business? Are they, do they have complicated financial setups? Do they have trusts and, you know, different corporations? You're usually going to be looking at, I've found, a little bit of a shell game. You know, how many times, Carrie, you'll know this, you look at a corporation and you're like, oh, they paid $100,000 to corporation XYZ. And you look at corporation XYZ and you're like, oh, that same $100,000 then went into this trust or went into this. So this is really where we rely on our experts. You want to make sure that you have a really good understanding of how the income is made up, where it's going and where it's coming from, right? And who's actually benefiting from that income. So I had a case about 10 years ago, and there were so many corporations, so many kind of different entities that they were moving money to and from. But basically, it was a family company. And what happened, and we only found this out because we were able to kind of look at the at the income and get the disclosure is that just before 2 or 3 days, if I recall correctly, before their son separated from their partner, it was his decision. He was fired from the company and a lot of money started moving hands really quickly. So it was very clear that he had an idea he was going to do this and he orchestrated this with the business. So he was an employee of the business, but he wasn't an arm's length employee of the business. And he had some ability, or at the very least, his parents and his grandparents had some ability to try to protect him. We also want to look at things like lifestyle. What other perks are they getting from the company? So this could be things like, you know, you're not looking at Leafs tickets or basketball tickets, but you are looking at things like car allowances, bonuses, shares. Maybe there's a bit of a golden handshake clause in there. You know, and we really want to get a really good sense of what is the actual income, because that's always a bit dodgy, right? What's on their T4 may not necessarily be what their income is. And then once you get to the child support, that's easy. Child support is the right of the child. There's been a lot of case law on, you know, over that 150 mark. And frankly, up until about $1 million, there isn't a lot of change. There might be some, you know, small, minute adjustments for child support. But generally, the courts like to look at what the support calculations would say. Now, of course, as we always say, it depends. So, you know, if both parties are pretty high income earners, then maybe a child doesn't need $5,000 of support. But maybe you have a party who, you know, has a boat and a cottage and a house, and is earning equity and things like that from those investments, whereas you have another party who's renting, and therefore a higher child support may, you know, be appropriate. When it comes to spousal support, though, this is where it really gets interesting. And spousal support, you know, I've seen things go from, you know, maybe you do a 50-50 NDI. And of course, this depends on length of the marriage, how many kids, you know, what roles they took, ages and stages in life, disabilities. There's so many things to consider. But if you're looking at someone who has, for instance, a lower income, gave up a lot in life, was a stay-at-home mom, I think you're going to get something closer to that 50% NDI. Whereas if you're looking at someone who's maybe younger, maybe they didn't have kids, or maybe they're back in the workforce, what I find is that judges will either tend to go a little bit lower, or the other thing I've seen them do is impute income to the lower spouse to make that difference a little bit more palatable. And really what they're trying to do here is you're trying to not discourage the high income earner from making a lot of money, because that's not going to benefit the family at all. And you're trying to encourage the lower income earner to make, you know, more money. Obviously, a teacher's salary is a certain amount, and you're never going to make $1 million being a teacher, but maybe they can impute a little bit more and bring it up to a little bit more to cover those summer months. But I really find that judges try to make it fair. That's what I find, Russ. What are your thoughts?
That's a great analysis. I like this concept of a shell game. I've had a case where the payer had a complicated income situation. Those were the arrangements he made. You know, holding companies, family trusts, multiple share structures. And the judge drew an adverse inference against him and said, you have a duty to prove your income, and you've made it overly complicated, and agreed with the number that we're suggesting. So that's been my experience. But let's talk about non-T4 employees. I guess the T4 ones are the easy ones. Non-T4 employees, business owners, bonuses. Carrie, what do we need to watch out for when we're looking at incomes, high income earners, 350 plus?
I actually enjoy the non-T4 employee. I always find them
It keeps you in business.
It really does, and I always find it really interesting what they're looking at. Like I had said earlier, when we're looking at business owners, it's not, we always just start. Your starting point is their T1, so their personal income tax return is always the start. By the way, I don't ever look at an NOA, I look at and go, that's really nice. The government like that you filed your taxes. That's wonderful. And I set that aside because what's really interesting for me is that T1 and going through there, because I want to see how they're claiming their income. Are they T4ing themselves out of their business? Are they taking dividends? Are there capital gains? Are they doing, is all of their income coming just from their corporation if they're incorporated, or are they sole proprietor? They're sole proprietor looking for that business and professional income part of their T1, because so many of our clients really like to give us the first 5 or 6 pages and then, oh, you don't need the rest of this. We absolutely need the rest of it. So when we want to look up for things, especially the small business owner that actually does well, you want to look at things like, are you writing off a portion of your house? What, like, where are you writing things off that's personal that we actually need to be adding back into that income? So that's just one part. If they're incorporated, we're going to go to that financial statement. The business section, by the way, of a T1 for a sole proprietor is the same idea, where you're categorizing out all of your expenses. So we want to look at that. And again, it goes down to if it's not sitting right. So for example, if somebody for some reason has $20,000 worth of travel, but there's no reason why their job would say they'd be traveling. I look at a real estate agent, for example, that maybe works in the GTA. I can understand how their vehicle expense would be high, but why would their travel expense be high? And unless they have an office somewhere else, they need to justify some of the things that they're putting down. Also, non-T4 employees can bonus themselves out, and how are you accepting that bonus? I have a matter right now where I can't figure this one out for the world why you would do this. Wrote himself a letter saying that he's owed a bonus, but he is not going to take it indefinitely. We found that was interesting. So there's these different things. The other thing you got to look at though with non-T4 employees and business owners, you need to look when we're looking at retained earnings, are there any covenants that the business actually needs to keep a set amount of money in the corporation that actually cannot be distributed as income? And that's something that we don't always look for, or people may forget to look for, and because it's just not something that's very common for a lot of companies, but it is something we should actually be asking about on everybody that has a business.
And what about if their new partner is becomes a T4 employee?
Well, they're usually
We've seen
become a
that, right?
T4 employee of the corporation.
The one spouse used to get paid by the company. They separate. Guess who's getting that check now?
Well, the other thing is, it's not only that, it's the kids. Like, Russ, you and I have had matters where the kids all had corporate credit cards, they had corporate gas cards, they were getting paid, but they weren't actually working. It was just a really great way for one of the parties to do some income splitting. So we do need to take in consideration everybody's income that's coming out. And even some family members that might be like, oh, all of a sudden mom and dad are part of the business, you know, my brother is part of the business, you know, the dog's part of the business now. Stuffy gets a T4.
We got a whole presentation on that, right? Saving the golden goose, but that's
well, exactly
conversation for another day. So, okay, we've got high income support cases, and you've come up with this acronym SID. So what are we talking about here?
Honestly, if I had $1 for every matter that had sudden income deficit syndrome, I would be considered a very high income earner. One of the things that I have noticed is that almost every matter that we have, the person that has a really good income, whether you're a business owner or you're a T4, that was the best year you have ever had. They'll never have a better year than that. It's my business is all of a sudden failing, to which my question is then why do you want to keep the business? Why are you not looking for a dissolution of the business? Why are you keeping it if it's not making you any money? I don't know anybody that stays in a business that doesn't make the money. with their bonus, it's like, well, why? What changed in your bonus structure that would have your income all of a sudden plummet down to nothing? So yes, sudden income deficit syndrome is for that client that just never going to do as well. This is my best ever. You absolutely cannot base my income on what I did previously.
Do you have a spray or an ointment where the income will just show up if you just spray it around the room?
Honestly, it's actually pretty funny because you have to start asking them questions. You have to start asking them questions. What's different in your business? So that,
Okay.
oh, you know, our business is failing. Well, why? I know, Russ, you and I had one, and it was actually plausible. They were in a printing business.
Yeah,
And we're in it, moving into digital media so much. It made sense that they were not making the same level of income that they were before.
and over the last 3-4 years with the pandemic, first couple of years, lots of businesses, we didn't even value, we didn't know what was going to happen, right? If it was
Yeah.
gonna survive. So I guess there is some merit to it. So determining support, Margie, what do we need to do to determine support?
Yeah, I think I touched upon, for the purpose of this discussion today, I'm going to just make some very brief comments about child support and interplay between child support and spouse support. As we all know, child support takes priority over spouse support. And again, the amount of spouse support payable is assuming entitlement is impacted by child support. Child support takes first dibs, and then we calculate spouse support. And this is just in general, not just for high income earner cases. And I mentioned a cap of 150,000. It's not really a cap. Never heard of it as a cap for child support purposes, but I'm going to say that just for the purposes of today. So for high income earners, Section 4 of the child support guidelines, as I mentioned, there's if you make more than 150,000 and you have a child support obligation, your income, if it exceeds over 150,000, the child support will be, there are two different approaches: the table support plus Section 7s, or if the court doesn't feel that's appropriate, they can then say, well, what amount is appropriate, taking into account the conditions, means, needs, and other circumstances of the children who are entitled to the support, and the financial ability of each spouse to contribute to the support of the children, and then any Section 7 contributions. And again, courts have the discretion to increase or decrease the support from the table formula, and they will generally follow. The table amounts, as Michelle mentioned, usually be followed for incomes up to and even over $1 million per year. Okay, so the interplay between child and spouse support at these higher income levels can be quite complicated. Apart from the reasonable needs argument, there's some spouse support elements to large amounts of child support. There's a concern that sometimes a child support is disguised as spouse support, or part of it is disguised as spouse support, and so we want to distinguish that. With higher income amounts of child support, the recipient standard of living also begins to rise markedly at one point, and at much higher child support levels, there should be some adjustment for spouse support amounts. But again, it's largely discretionary, and unfortunately, there's a little guidance from the case law to determine at what point on the income scale the adjustment should occur and how much it should be adjusted by. In cases where the payer earns more than $150,000 but less than $350,000, as I mentioned, they tend to stay close to the SAGs tend to be within the range or below the range. In terms of spouse support, determining spouse support.
Before we get to spousal support, we have a poll.
Okay.
And you're going to give away the answers. So let's see what our audience.
Oh, okay.
When determining spousal support, you should focus on the SAG ranges or NDI percentages. 50-50 NDI, 30%. Audience thinks mid-range, SAG, 25%. Some smaller amounts for high, mid. Neither if the payer's income exceeds 350, that's 21%. Whatever outcome best suits your client. We all agree with that one. 17% for other. Okay, so we have a variety of answers, Margie. What do we need to know? Help us out. We're all over the map.
Yeah. So again, the focus today is for high income earners, right? So when we're determining spouse support for high income earners, it's a bit more complicated, like we said, because there's a lot of different issues. First, we have to determine entitlement, right? And in some cases, like
A lot of people overlook that, right? That's the first question is entitlement.
Exactly.
But they run off to the SAGs without even giving it any consideration.
Exactly. And that was the case in Plus and Harjavec. The court actually said, you do have to look at, because the wife in that case, I believe she had the ability, at one point she made almost $700,000, but the payor husband made 5.5 million, right? And it was a long-term marriage and there's a significant disparity in income. So, but the first analysis has to be entitlement, and assuming there's entitlement, then, and again, entitlement will also determine, especially for high income earning spouses cases, where you would fall in the range, right? And that was what was discussed in the Court of Appeal decision in Harjavec. I can never pronounce that name. Sorry. So in any event, so the courts will look at also not just disparate incomes, the length of the marriage, entitlement, what lifestyle they had during the marriage, means and needs of the spouses. But a lot of these cases as well, they look at the property division, right? Because if equalization, when we have a high income cases, it usually means high asset positions, and vice versa, right? If there's high asset positions, and usually we're talking about people with higher incomes. So a large settlement, property settlement, gives the spouses security and the capital to fall back on, and will likely lead to an amount lower in the range. And in fact, in the two Ontario Court of Appeal decisions, the leading ones, Hallowell and Harjavec, I think I pronounced it correctly that time, the courts did look at the effect of the significant equalization payment, right? And they also looked at the incomes that the parties would receive from the higher property settlement. So we don't just look at their incomes during the marriage at separation, but we also look at what will their incomes look like after the equalization has been paid. So when we're talking about determining spousal support for high income earners, those are the general principles we have to look at and the courts will look at. And again, just one last point, when we're looking at the SAGs, high property settlement or high equalization payments are an exception, right, under the SAG. So that's why I think a lot of the cases determine spouse support in these high income earning cases lower than the SAGs. So that's just because it is an exception under the SAGs.
So Michelle, what do we do about NDI? What's your approach when there's a high income earner? What do you think what are the takeaways when we're looking at net disposable income?
Well, I think I would usually make this argument if I were acting for the lower income spouse, because, if you get a judge who says, okay, you've got to pay $5,000 in spousal support, it usually looks jarring. What, if $5,000 is more than rent, it's more than your mortgage, it's, you can live in a really beautiful house for $5,000 a month. But when you look at the NDI, the net disposable income, and for anyone who doesn't know, our students there, when you do a support calculation, there's that little graphic that shows the little person with the little people. Underneath that, there's this little thing called percent of NDI. It's often overlooked. I probably didn't really even notice it for the first couple of years of practicing. But really what it shows you is at the end of the day, what's the big picture number? Who's getting what at the end of the day? And when you put in the calculations, you have to put in, the income, the deductions, fees, union dues, all of these things. It sometimes gets muddy, right? Who's actually getting money at the end of the day? There's also things like government credits and benefits, or, lots of other programs that give you extra money. So NDI, or net disposable income, shows you at the end of the day what each person is getting in their pocket. And it's a really great tool because you can say to the judge or the arbitrator or the collaborative team, hey, 5,000 a month does sound like a lot, but if you look at the NDI, we have, you know, dad and 3 kids, and dad's the lower income earner, and he only has 40% of the NDI, whereas you have mom who doesn't have the kids and she's got the remaining 60%. So it really kind of puts it into perspective. It's not, you know, it's a factor. It's a factor to look at. Of course, I'm going to say, okay, yes, everything should automatically be a 50-50 NDI split. And as Margie said, I 100% agree. The higher the equalization, especially if that equalization was done in a way that generates income after data separation, usually the 50-50 NDI argument will not work. So you kind of have to pick and choose when you do certain things. Right?
We've got some great comments coming in here. One is cash is king, but it seems elusive as a unicorn in a courtroom. Sorry, go ahead, Michelle.
No,
Thoughts
yeah,
on
I
NDI?
agree. Cash is always king. I've done a full trial on someone who said that they only made $50,000, but if you looked at their output of what they were actually, their lifestyle and their spending, they were spending about $350,000 a year because they were in HVAC and they just got all this cash.
And I've had case management judges take me into chambers saying, okay, kids are over here. This is the custom NDI. I want you to go figure it. It might be, you know, 52.5, and that's percentage. Go do the calculations coming back because that's what I'm going to order for support. They just tell you right up front. This particular judge approaches it with an NDI mindset, so that's very helpful.
I do think, though, that you do have to be mindful of your T4 high income earners when you're looking at NDI. And if you're including bonus structures, there's a lot of times, and I have a matter right now where high income earner, but by the time we do the calculations with child support and spousal support, he's left with $1,500 a month to live on. But it says they have equal income, but he doesn't see any of his until either tax time, or he can try, and I do say try, to get the CRA to say he can have less income tax deducted. But if you're a high income earner, it's less likely they'll agree to that scenario.
And you know what's
Talk
interesting?
to your payroll at your company, though, right? Sorry, go ahead, Michelle, because I want to
No, it's okay.
support you early, but go ahead.
But that's why collaborative and MedArb works so well, because if you have a situation where, hey, it's a haves and a haves nots, you know, he won't have during the year, but he's going to get a really high income tax return. You could actually create a settlement that says, okay, we're going to give X number, you know, a base child or spousal support, whatever it is, to the lower income spouse. But when the taxes are done, you have a recalculation and they have, you know, 3 to 6 months to pay it back. So I love that clause, and I use it often because we do hear those arguments, and we understand at the end of the day, we're not out for blood. We're out for, we want to maximize everything to make sure that the children are taken care of.
Well, for justice. Okay, so Carrie, next 4 slides, 30 seconds each. We want to catch up and save some time for Q&A.
Okay, I'll talk really fast.
I got my timer going. Go. Recalculating support.
Yes, we do it every single year. We do charge a flat fee. Just send us in your information and your separation agreement. We get it done really, really fast. It's super easy to do. My main caveat is we must have your separation agreement or your court order for us to do it. I do not go off of just what people tell me because, well, people tend to lie every now and then. But honestly, it's usually not bad. I also want to see if their spousal support is set. And there's no change to it, and we're only changing child support and what the proportionate sharing is for section 7s.
30 seconds or less. Periodic versus lump sum payments.
Honestly, it is all dependent on the file. I am a firm believer that if you can do a lump sum payment as the payor, take the lump sum payment, get it over with, be done with it, only concentrate on your child support. It's cleaner, it's easier for the payor at the long run if they can actually do it. Otherwise, periodic can also work in a payor's favor, keeping in mind the recipient may want the periodic to qualify for mortgaging, and it is a detriment to the payor trying to get a new mortgage. So those are things that you want to take into consideration.
And if you're doing lump sum, try to negotiate a release. as part
Oh,
of the
100%. Get that release, get it signed, sealed and delivered.
blended
I
pay,
wouldn't do a lump sum without a release. I think that would just be crazy.
blended payments, 28 seconds or less.
I like blended payments. It's somewhere where you can do, we're going to do a little bit of lump sum, a little bit of periodic. We shorten down the time. Everybody gets an end date. It also is a fabulous way for people to get their mortgage approvals on both sides. It can benefit both people beautifully. And it gives that finality that everybody loves.
Okay,
And
Margie,
get a release.
Margie, you're gonna have to deviate from your notes. We're gonna give you 40 seconds for inheritances. What do we need to know? Oh, wait, we got life insurance too. What about life insurance? Carrie?
Life insurance, absolutely, keeping in mind that it's on a decreasing basis on a year over year, especially for child support. There's lots of different ways that it can be secured. The only thing that you really do have to watch is if you have a self-employed person that has a health issue that does not allow for life insurance, you are going to have to write something different in there to secure support against their life.
And the SAG, you hit the button and it'll tell you what the insurance should be based on what
1000%.
you agreed to.
Also, with life insurance, even if you have one person that's a non-payor, I do say that they should actually secure life insurance as well, because if anything happens to the non-payer, that other person should, have something in the way of help along the way for the raising of the children.
And be careful with the way you phrase the language, right? Because if you have a $20 policy and 1 year left to support, you don't want that going, right? Got it.
Exactly.
Okay, so what do we got left here on our side? Other considerations? Any thoughts? Anybody you want to add before we move on? Or let's get to inheritances. Margie?
I can,
30
in
seconds
20
or
seconds.
less.
I could do 20 seconds or less, Russ.
All right, all right.
Okay, so generally inheritance don't have any impact on child and spouse support. It's property during the marriage. It's excluded property except anything that's traced to the matrimony home. However, it usually comes up in variation cases after separation. If someone receives a significant inheritance, it may impact their support. If they're a recipient or a payor, because any income they earn on those gifts and inheritances after separation might mean a change or even a termination of spouse support. How many seconds was that?
Wow, that was 19 seconds. You left Carrie an extra couple seconds for this one. This is a tough one.
What'd you give me?
See what our audience thinks. Should a payer be allowed to use capital loss to reduce their income? I had a case, payer spouse had, I don't know, $10 million loss, something incredible. So basically reduced his income for a number of years, but he's making millions.
Yeah, no.
And then he's saying, I've had this loss, I'm not really making it. So what do we do about capital losses to reduce income? And
The capital loss should have been disclosed on the NFP because it's actually an asset that can be divided, and that it should. So that's how you can handle that nice and clean and easy.
Unless they're common law, then you got a problem.
Well, then you got a different problem, but you can see the capital losses on an income tax return easily. So it's all there.
Okay. So let's do a quick roundtable. When taking less means more. What do you guys think? Carrie, you want to start us off?
When taking less means more, basically I like this for sometimes taking a little bit less for maybe it's a little bit of a longer duration. At the end of the day, with the non-T4 business owner, the goal is to keep the business alive so that it is benefiting everyone. It benefits the children, it benefits both parties. If you kill the business, then you're going to get nothing. So it's sometimes like getting all you can is not always your best strategy. Sometimes take a little bit less.
20 seconds less or less. What do you think of this? Taking less is more.
Me?
Yeah.
Oh yeah, sorry, I didn't hear what you said. I would say that you have to, when I always tell my clients, I do a cost benefit analysis. You might think huge dollar signs when the other side isn't a high income earner or there's significant assets, but you have to minus any legal fees that you incur from that. So sometimes, taking less means more in that case.
Michelle?
I find this a lot when it comes to incentivizing higher income earners. If they're going to be giving 50% of their income away, they're not going to be incentivized to work harder to make that bonus, to do things like that. If they know they're getting a little bit more of a discount, even if it's a small one, it tends to be an emotional thing. And they say, okay, you know, I got a little bit of a break, so I feel good about doing this. And, you know, as Carrie said, if that person burns out, if they, you know, get a stress leave, if they do anything like that and they stop earning income, everyone loses.
Yeah, and businesses can be fragile, right? If the business owner is distracted by litigation and subject to questioning and doing trials, they're not running their business and it can falter. So good point. Shannon's back, which means there's a quick Q&A and our hour is up. Where did that go? My goodness. Welcome back.
It always goes by so fast. It's a short amount of time to fit in a lot of complex issues. So I just want to thank our guest speakers as well as our associates from our firm today for joining Russ on the panel. And we hope that everyone found it informative, and just want to thank everyone for sending in their questions. As I mentioned, we have quite a few that came in, but we only have a few moments left. So we're going to try our best to get through as many as we can. So first question we have here is how to determine whether the quantum should be low, mid, or high when the payer earns $250,000 compared to the recipient earning $30,000.
Carrie, well, there's a number of factors, obviously.
Yeah, there's a lot of factors. I'd say one of the ways you can start is do a budget. You know, do a needs analysis, like what's going to work. It's not always as cut and dry as going, it's mid, it's low, mid, or high sometimes. And also, I want to know how the kids are being parented. Are they 50-50? Is somebody primary parent? I want to know that. But it's one of the ways you can do it.
Length of the relationship, roles played during the course of the relationship, existence of a compensatory claim. Lots go into that mix. Next one, Shannon.
Next question is on child support. When determining child support, can a high income earner who works out of town deduct their accommodation costs from their income?
Margie, what do you say to that?
I would say that yes, if the payer can prove that the expense is actually a legitimate business expense. If not, then they'll have to prove that it was a legitimate business expense, is the short answer to that.
If they're a T4 employee, I want to know if they're being reimbursed by the company.
Yeah.
Thank you. It looks like we have time for one last question here. If a spouse started earning a high income during the last year of marriage, but their income was not determined until the end of the year because the income was based on commission, would the other spouse have a support claim to this commission?
Great question. We saw this one come in early. Michelle, you want to take a crack at that?
Yeah, so if I'm acting for the recipient, obviously my answer is going to be yes. And it really just depends. Very likely, if it was accrued during the relationship, it's not just based on that 1 year. It's likely a buildup. So it's you know, communal effort that led to that. So I would say it depends. It depends on a lot of factors, but my argument would probably be yes.
Yeah.
Great. Thanks so much, Michelle. And thanks again.
They earned it during the course of the marriage, right? Simple as that. Great question, though.
Thanks again to all of our speakers for offering your time and knowledge today. We really appreciate it. And just want to thank all of our audience members again. As I mentioned, I know we've received a lot of questions. I just want to note that we do keep them on hand just to see if we can incorporate them into future programs or also into our various resources that we offer to our community. So we do keep those on hand. So thanks again for sending those in. And we hope to have the opportunity to host you again soon.